What's going on, guys and girls? Hope everybody is well and you're having a good weekend ready for next week. I'm sure a lot of you have been anticipating what is the best plan of action for next week because of the elections, which I'm just about to go over. So excited for the live webinar tomorrow night. Can't wait to see as many of you there as possible. I know for a lot of you, it may even be your first webinar that you're attending. So it's going to be awesome to catch up and really just map out what does the next 2 months look like. What is the plan of action in terms of the markets? What can you do to be getting the most out of your learning and your development to really keep hitting those goals, ticking them off, and just growing overall as a trader? So looking forward to catching up with you guys. It's going to be awesome. And in terms of the markets, I mean, I think it's clear to say sensible side. You don't want to be caught off guard. I've been there before. I've been in this business long enough now to realize, in certain situations, it's actually worked out for me, but it was reckless. It's ridiculous. I would not recommend it. And it only takes one moment for the market to humble you in seconds, as we say. Humble yourself or the market will do it for you. And you can undo so much of your hard work, all of your progression, all of your breakthroughs over a silly little move of over risking, over leveraging, or just trying to predict something where your ego is so involved that it's then sabotaging your growth. Just don't do it. You've worked so hard. Don't let something unravel all of that over a potential for a short-term game. So I think it goes without saying, if you're a Falcon student and you're growing and you're developing and you understand the principles and the values and you've got that business level thinking, you're not just going to be jumping in with a short-term gain anyway. So I think we're all on the same page for that. So let's just let the dust settle, let the market settle for the first couple of days, and then we will have a much clearer picture as to what we need to do, what kind of avenue we need to go down, and what are the best opportunities. So I'm forecasting as normal, but also being attached to nothing and understanding that things may need a little bit of time to play out. So we'll approach the first few days. And of course, if anything crazy happens, of course, myself and the coaches, we're going to be right there in the trenches with you and be updating you every step of the way. So let's be safe, sensible, but also be on the ball, ready to take advantage when the opportunity is right and when it's sensible to do so. So starting off, looking at the week ahead, my wildcards, I'll go into, of course, a lot of detail in the live webinar tomorrow. My wildcards is quite extensive. And the reason as to why is because things could change. Price action can be quite erratic around the time of the election. So things that we could be looking at right now is just completely different because of really ugly price action or whipsaws or any spikes. So just understand that, it's one of those rare weeks where you have to be open to a lot of things changing. So we'll see how it goes. But first up, let's take a look. So DXY, what are we expecting? The good thing is throughout all of this and from all my years of experience, whether it's Brexit, whether it's elections, European elections, last time there was some slippage and spreads and a lot of gaps. Last time, throughout my experience, the technicals are the technicals. It never changes. But in that brief moment, so on the macro, the bigger picture, it doesn't matter because structure always plays out. Structure is king. We know that. But in the brief moment for that week ahead that we have, it's important. So news creates volatility, not direction. Yes. But in that brief moment for next week, this is important to us because we want to make sure that we're protecting our capital. But if we look at the technicals for what they are, because we may not have as much volatility as what we expect. And if that is the case, what we're seeing on the DXY, well, I see quite simply, this is actually turning into a larger flag. So being attached to no outcomes, that's important. But what I see is this. You've got to understand that where are we? We're at the 90% rule, right? We can all agree on that. Let's look at last time, what happened. So if you remember this, I remember trading through this, and we had this area here. So we'd broke these lows, right? We'd broke these lows, and people were looking at this as, some sort of significant support, if you like. We broke below, and then we formed a flag. At that period of time, surely that looks like a flag to move to the downside, right? But then we move to the upside. It's because of the area that we're in. So it's the same way we're looking at things like dollar CAD and dollar Swiss, where they've essentially broken the lows. And just because they're forming a flag, these can become quite neutral and then break to the upside. So then I take a look at where are we right now in terms of the DXY. We're at the 90% rule where we can create these deeper corrections. Now on one side, that looks, like picture perfect, clean flag that could play out. Middle section here, push up, continuation, impulse correction, continuation. Yes. But then at the same time, this price action, let's say higher up, would have a higher probability of pushing to the downside. So because we are at the 90% rule, I'm also not attached to this having to play out. And I wouldn't be shocked if we just completely pushed past that. And then we formed continuation, then we started moving to the upside. It's because of where we are within structure. So it's about being ready for everything, right? And if you stay ready, you don't need to get ready. So what I mean by that is that if you're always on the ball and you're showing up every single week and you forecast the same, you still do the same thing, well, then you're staying ready. So you don't have to keep getting ready. And it takes a lot more energy to get ready unless you're always prepared. That's why we keep our foot on the gas. So looking at this area here, let's just see how it plays out. Nothing too complicated there. Euro dollar, nice and simple. So what I will be doing is, like, I won't be trading for the first couple of days, just to make that part clear. So I'll just be letting that play out, and then ideally we can get a long position here. So I'm looking to take this long with this structure, take it up to these areas, and we'll assess it from then. So everything's kind of almost short term at the moment until we get more of an idea of what price action is looking like. But how I will take this, so let's say we're looking more around the kind of Wednesday time now, right? So let's say, and some of you might even stay out of the market for the whole week. It's entirely your prerogative of exactly your plan. But let's say this creeps up to this area. I'll be looking for more of an impulse up and a flag as confirmation to take that short-term trade. So keeping it really simple with euro dollar, but I like the value area. I like where we are. We're at the 90% rule area. If we get that squeeze there, that push up and that first flag will have a very high probability for that short-term push up. And I mean, the risk reward, we're looking at over a 10-1. So from that perspective, that looks solid. And the only area that I would look at for the first sort of target would be just that previous high there. So nothing too crazy on that front. And I think a lot of you will be looking at the same thing. So euro dollar, nice and simple. Pound Oz, I like pound Oz. Let's have a look. So two things on pound Oz. So we've got this structure remaining open-minded to this high time frame. Do not ignore this high time frame. This can still be their inverse head and shoulders around this area, and there's a larger flag on the lower time frame, then it just completely pushes to the upside. So I've got that in my mind as well, and being as neutral as possible. But then when I go to the 1 hour, I can't ignore the pattern. So what do we see? We see our 1, 2, 3. So we've got that kind of section there. But then when you strip it all back, which I think is really important to take a look at it for what it is, you look at the current price action. As I said before, don't be surprised. Remember here, we pushed to the downside, we formed a flag, we pushed down, and it just kind of crept its way higher, and this becomes a flag. Not a pretty one, but you can see it's just a corrective structure. Now in this area, can we be creating the same thing where we reject off the double top, we come back to the downside, we create a base here for the double bottom, and then we move higher, and then we look back to the higher time frame, and then we see, oh, okay, yeah, that inverse head and shoulder push to the upside. All that was an impulse correction, larger flag to move higher. So I'm not attached to it going to the downside. I'm just being aware of both sides. But I'm more in favor, of course, taking that for a short-term sell. I mean, if we can get that to the downside, then perfect. But then being aware of what's happening here as well is key. So let's see how that plays out. Ideally, what I'll be looking for is either a really slow squeeze. So if we get a really slow squeeze on that third touch, of course, rule of 3, risk entry, I'm happy with that. Alternatively, if we get a push to the downside here and a 15-minute flag, this is what I'm more in favor of, to be honest. I'm more in favor of that happening. So unless this is super, super clean, I'm not going to mess around with it. Is this valid to take those trades there? Yeah, of course. But you've got to understand from the longer term perspective, the higher time frame is there. The only thing that I would say is a little bit better on this now is that now we've developed a little bit more on the 4 hour. This has got a little bit more depth to it. So a risk entry in here looks a little bit more favorable than what it once was before. You see that squeeze there that can almost seen as a wedge to kind of tag you in, tag you out, and then just keep creeping higher, where you see this has got a bit more depth to it. 1, 2, 3. It's got a whole big structure here. So a risk entry here could be a good play, but we want to see some clean price action. But a push down and a flag would be the sensible approach. So if we could get that, let's say Wednesday, guys, that'd be a stunning trade. So let's see how that plays out on pound Oz. And then dollar yen. I mean, dollar yen is real simple stuff here. So depending on your personality as to how you're going to take dollar yen, let's have a look. So we have the 1, 2, 3. We're not supported by any kind of higher time frame at the lows, but there's still a big structure, very equal spacing. But it doesn't mean just take a risk entry just because we're in that area. I think we know that now, right? So for those of you just coming to Falcon for the very first time, you're going through the content, be patient with it, guys. You've got some learning to do. And just because it's a 1, 2, 3 doesn't mean take a risk entry. We want some structure there. So that's what we'll be looking for. So can we get a structured approach? Can we get a structured approach? So if we can get a 1, 2, 3 in here, and it's a very clean structured approach, which we could get, risk entry could be an opportunity. And then we'll be looking for, like the 30 pip stop wouldn't be unusual. And then looking to take this to the upside and beyond, looking to around these sort of areas to about 10 to 1 and maybe even more, so let's see. But if price action is even remotely messy and it just looks too corrective, then just wait for the push and wait for the flag. You don't need to be fast. So if it just squeezes here and it's not too clear, and then we get a push up and a flag, then we just take that first flag. The first flag, 15-minute or 1 hour, will be more than enough and a very high probability of playing out. Would it be better if that whole price action was at the low there? Of course, but I mean, there's it's borderline when you're looking for perfection. This meets the criteria. Could it be more high probability? Yes, but we're not being a perfectionist here. We're just following the plan. So I like that. I think dollar yen will be a nice play after things settle down. So that's that. And Kiwi CAD. I think Kiwi CAD looks so good. So Kiwi CAD on the daily chart. So looking at the overall daily double top just reminds me of the previous area here. So again, similar price action. We take that. I think we can see it's very, very obvious that we're seeing similar type of price action. So when we have these daily double tops, especially on Kiwi CAD, they're very reliable of playing out. So I'll be looking to get involved in that if we get to this kind of third touch. I like how this is very parallel. I'll be curious to hear your thoughts, guys. But what really sticks out to me, middle section, move to the upside, 1, 2, 3, daily double top, clear middle section, parallel structure, and a 1, 2, 3. I mean, what more do you want? So a bit of a push up here would be very, very nice. I did take a look at what's going on in here, which is something to be aware of, but it's not the cleanest of price action, but what we have to consider. So you see how we have our kind of double top area, this kind of mini double top as it creeped up. Well, then we also have the element of, can this encompass this type of formation where this becomes its own kind of expanding within the pattern, which would then in turn see this kind of corrective break as a break to the downside. So if we pushed a little bit lower, like so, and then we formed a flag here, I would consider getting involved in a short there, because then we may not be going all the way to the top. Remember, we can't be attached to that has to happen. It's just we can see the price action looks very clean, that's likely. But if we do get more of a solid, convincing push down and then a flag, this could keep going from these areas. So we have to be open and neutral enough to recognize that. But if anything changes and I see that, then I'll be updating you guys in Slack and letting you know my thoughts. But of course, the ideal area is here. So let's see if we can get up to those value areas. Then we've got Euro Kiwi. I mean, Euro Kiwi is a no-brainer for a sell here, but also if you look at it on the 4 hour, like so, we have to understand that this kind of double bottom that we're seeing doesn't have to be the third touch to continue down. What it can also be is actually a push and a break above. So if what we see is this, if we get a strong sudden push above this and we close above and then we get a flag, then this is no longer that continuation lower, and then we'll just see that push to the upside. So if you're interested in the short-term buy, that could be the play. But as of right now, what looks the cleanest? Well, you consider the area that we're in. So we're essentially in the red zone, if you like. We're so far into the move, but does it mean that we can't take these trades? It doesn't. It means that we just want clear criteria, and it falls more to me just a good valid trade. So seeing this kind of 1, 2, 3 squeeze in this area, either looking for a risk entry or a push down on a 15-minute flag, considering that we're quite far into the move and the bigger flag and what we have for next week, I would be more in favor of a little push down on a 15-minute flag in this area, considering all those things. So looking at it, like so, let's say we can get a flag in this area. It wouldn't be unusual. Let's say we get a 30 pip stop on it. What's the risk reward? 5 to 1 to there, to the low, and then 7.8. So if you think about it, is the risk to reward there? Yes. Can this be a longer term play to the downside? Of course. And can it keep going? Possibly. But if we just approached it to the bottom of the pattern, there's still pretty much a 5 to 1. And then to the real obvious low, we're looking at about 7 to nearly 8%. So it's there, but it really depends on how clean it gets there. If you start to see a move here and then it's really, really, really clean, and then you've got a nice phase line break, then of course you've got a 1, 2, 3, it makes sense. But if it's messy by any means, then remember, you don't have to be first. Waiting for a little push and a 15-minute flag is absolutely fine in this area, and then we'll see if we can get short on that one. So curious to see how that plays out on Euro Kiwi, but we will assess that. And then of course dollar CAD, very similar entry in terms of larger flag. So dollar CAD, remember, we didn't break the low. That's a good thing. because that gives me more reason to believe that the fact that we was creeping down towards that kind of double bottom and then we still didn't get there and now we moved up, I think it's very obvious, and a lot of you will agree with me, this is a larger flag. So we have 1, 2, 3 equal spacing, middle section here. Look how clean that looks. Then we go to the 4-hour chart, and then you can see we've got that 1, 2, 3. The only thing I would say, it's quite far into this move, close to this low. So what would I ideally want to look for here? Either a push and a flag, or a structured approach, right? And what I mean is the last leg being structured. So ideally, we can get something like this. And if we get a 1, 2, 3 and it's clean, yeah, I will consider a risk entry. But all in all, based off of the price action, based off of the first couple of days, might be a little bit messy or corrective. What I'm more in favor on slightly later in the week, a slow push up, maybe a bit of wicks. Don't be afraid of a bit of volatility. Of course, wait for that to actually happen. And then if we get that push to the downside, and then the flags. And if we get something like that, that would be a no-brainer for a sell. And I believe there's about 15 to 1 to the downside, depending on, of course, stop size. But what we would usually get, there's a decent enough risk to reward, even if we just played it to these lows. And then if it turned into a move to the upside, we will assess it at the time. But either way, there's decent risk to reward. So like that. So that is the top 6 for myself, guys. Of course, we will be very open-minded this week and just be on the ball. Just because we're out the markets, be productive. Use it as a time to actually assess what happens. And sometimes, guys, to be honest, it's not always a bigger impact as what you think, because a lot of things are priced in. However, there's no point taking the risk, because all it takes is one bit of slippage, one bit of move that when you're on the wrong side and you've over-risked a little bit, or not even that you've over-risked, you're sizing up your position and then you get slippage, and then you're on the brink of, let's say, breaking through, and it knocks your confidence. How much is that worth to you? You have to think about all these things. It's not always just the money or the percentage. It's what it does to your confidence as well. So just keep an eye out for that. So myself and the coaches will be keeping you updated. And just a very quick look at the wild card. So as you can see, I've got quite a few, but I may narrow those down, but I want to let price action play out. But quite simply, as an overview, so pound yen, waiting for that push to the upside. So looking for that short-term push up. And then on the 1 hour, I'll be looking for a sell around this area. I do think pound yen could provide us with some really nice trades. So I think later on in the week, that could be solid, guys. Pound dollar, very similar in that sense. You can see we're just creating a much more complex, deeper structure. And after this kind of corrective move down, that's more of a reason, like I said, that will probably push to the upside. And we may be seeing some decent trades in these value areas. And then we'll be looking for some sells. So that looks solid. Euro yen, the only thing I like about euro yen is if we didn't quite make that move to the upside that we was looking for to then look for the sell. But look at the weekly. So when I look at that on the weekly chart, I can see, right, okay, so we've still closed heavily to the downside, which is what we want. So lower time frame pattern confirmation. A larger flag in this area would be key. But also at the same time, this could be a much more complex pattern where this could push up, and then this becomes a large expanding where we need to give it a little bit of time. So let's see on that one. And then Kiwi dollar took a break even last week, which I'm sure a lot of you did. Let's have a look here. So Kiwi dollar needs a little bit of time, but what I'm curious to see is just if we climb. So if this becomes a corrective move up, short-term flag, maybe some short-term buys, and then just look in these areas for sells maybe later on in the week. So that's that. Dollar Swiss, expecting, again, just that one more push to the downside. So expecting that push lower before we get that move to the upside. So I do think that this is still hovering. There's an obvious, clear gap here that we didn't break the low. So this gives me reason to believe that that's an expanding where this can just kind of creep its way down, break the low, catch traders on the wrong side before we move higher. So that's still intact. And then for Kiwi yen and Aussie yen, what I see for Kiwi yen is a potential little squeeze here, push up, short-term buy, and then the sell. I think that is clear. So we may be able to get a short-term buy there, which I like. And then on Aussie yen, I think is more in favor of this catching traders on the wrong side here, thinking that we're now going to the downside, and we'll likely see this push up, flag, and then short-term buy. So I'll assess that. We'll see how it goes. But as you can see, all it takes, guys, is one bit of price action, and then things avoid. Something you looked at, you just think, oh, that looked incredible. Now it just looks ugly because of that volatility that can happen. So that's why we really want to act on the side of caution, be sensible, be clear, and then just wait. So looking really solid for the week ahead, but first couple of days, let's be smart, guys. And overall, really excited for the webinar tomorrow night. So I hope to see as many of you there as possible, and we'll keep on with some momentum. And of course, myself and the coaches will keep you updated in Slack. Let's keep our foot on the gas, guys and girls. As always, catch you all in Slack. See you guys.